Let's check in now with trader Alan Knuckman for reaction to the Fed decision and get his thoughts on the stock market. Alan, you are always so optimistic. What do you have for us this week?
Hello, Angie. A lot of positives. A bottom base is now in place. We saw an upside breakout. That's bullish. And we held our gain.
Alan, let's track your trades. Tell us about some of your winners and what's happening.
All right, let's talk about our current positions. Now, it's still a macro market. So we've seen some reversal rallies. A good example yesterday was WB, a stock that's in our portfolio. The stock itself was up 20%. So what you're seeing is the power of this comeback attack. And the options positions we have are mainly June and July. So we've got 3 and 4 months for further development.
What's your new trade? Because I know you're watching the financial sector this week, Alan.
All right, this week's trade trigger, Deutsche Bank. Now, this was a stock that has had a big drop and a bit overdone. We have a bullish divergence bottom. It was down 40% in a month. Obviously, concerns about exposure to Russia and their banking. But technically, I see what I like. And also, the PE on this stock is at 7, so it's very, very inexpensive. This stock had been trading between 10 and 15 per year, and a breakout of that range, targets 20, is where this stock was in 2018. So the option play here is the October option, the October in the money $8 call. Again, we're trading about 12 and a quarter or so. So it's $4.25 in the money, trading for about $4.70, $4.75. So the expiration break even is 50 cents higher with 7 months of time. Technically, I like this bottom base that is in play.
How about your trading day takeaways, as we're getting plenty of Fed speak and commentary this week?
All right, let's talk about the trading takeaways. Trading takeaway number 1, drop from the top. All right, we've talked about commodities. Commodities had a climb, I guess is a polite way to put it. Crude is now $30 off that high. Gold is almost $200 off that top. And wheat has dropped $3. And this all happened in just the last 7 to 10 days. So that's very positive for other sectors on this price pullback in those scared sectors. Number 2, half scared. VIX. The VIX is trading around the 26 level. It's the halfway point of the year high to low from 14 to 39. So we're back down to the halfway point. And it's down from its January highs significantly, down 30% from its January highs. Now let's remember, it did not make new highs when the S&P made new lows here in February. So that's very much a positive fact. That's an example of bullish divergence. And number 3, Wedgie feel good. This series of lower highs and higher lows formed a technical wedge of 300 points, a breakout here at the 4250, which also happens to be the super pivot from the last year, from 2021 lows to 2022 highs. So it broke out there. Now that projects another 300-point move to 4550. That's another 5% above, and we're 5% off the lows. So we're building on this base.
Thank you, Alan. Have a great rest of your trading week.
Thank you.
Go to businessfirstam.com for where to see our show on TV.